Hey guys, let's be better. That's right, today, let's just be a little bit better than everyone at CNBC. What do you say? Hey everyone, this is JR from the Market Surveillance Alliance. The Alliance, MSA, whatever you want to call it, whatever you feel, it's how you identify with our community. What I do is we basically track high rollers. We want to understand where everyone is rotating capital, when everyone is jumping ship, when everyone thinks the end of the world. We want to know exactly what are the big boys in Wall Street doing. And we do that with several algorithms that I help to code and to track exactly this activity, to have an idea what they're doing. So today, I just want to let you know that we want to be better. So to be better, you have to think a little bit outside the box, and you have to plan outside that same box. So I don't blame people. If you look at these crappy headlines, I'm pretty sure they're getting a lot of hits. The recession will hit in the first half of 2023, and the Dow, it's headed lower. CNBC CFO survey. Now, with all those headlines, you definitely don't have, or sometimes it's very difficult for retail investors or for any investor to be positive. But we have to be realistic and we have to look at the numbers. And today, once again on Mondays, I'm going to share with you in the description of the video where are we as far as the 300 double V strategy that we use at MSA to trade the stock market. When we just focus on trading SPY, the ETF of the S&P 500. But at the same time, I'm going to repeat over and over again every Monday what is the leading indicator and what is the only thing that matters today when it comes to understanding where is the market heading. And it's a very simple way to look at it. So guys, let's be better than CNBC and let's take a look at what the SPY probably will do in the next 24 months. Now, in the short term, a lot of people want to sort of predict pricing activity. There's none of that here. What we look is to the evidence. Now, the first evidence that we're going to work is where are we so far? If you study the leg, okay, this is the leg. It's one, okay, that's the bottom from the pandemic, and then you have two as the top where the market stops going up and then reverses. You have this range. Where are we? Where we think we are now at 3. So in these circumstances, what you want to use trend Fibonacci. A lot of people call it just Fibonacci retracement, but in this case, we'll be going from 1 to 2. You expand, and we have evidence so far that the market has bottomed from the technical perspective of Fibonacci retracement. That's because we're the 38.2%. Now, a lot of traders expect a deeper correction all the way to 61.8. That makes sense. A lot of investment bankers, they think that that would be an opportunity, massive opportunity, and that would be the big low. That can actually, in some other technical pattern, can head to an inverse head and shoulder, and that's fine, but not necessarily based on the conditions. Now, the reason why it doesn't have to happen is because we already have evidence coming from the leading indicator in the market today, which is the 10-year note. That's right, the U.S. 10-year Treasury note, that this is actually a bottom. This bottom happened in June. Now, I can talk more about how this relates also to the condition and the appreciation of the U.S. dollar, but just for this video, I want you to pay attention to this leading indicator. If this thing crossed to the upside, 3, we're in big trouble. But if we head to 240, then no worries. The inflation will be attained for now, because a lot of the chaos comes from the U.S. 10 Treasury note. Above 3, danger zone. Under 3, peace. Okay? So let's go back and continue with the Fibonacci. So based on the price action, based on of the behavior of the U.S. 10-year Treasury note and the bottom that we see at a key level of Fibonacci, there's no way to say other way. There's a technical bottom. It's a fundamental bottom? Of course not. A lot of people are guided by these headlines and all the drama that you get from Jim Cramer and company. And that's fine. They get paid to do that, to be entertainers, to get your eyes, to make you think and sometimes suffer. But on the other hand, when you come and watch my videos and you look at my charts, I want you to see the opportunity. that it's on the table. So we have full confirmation. This, for some reason, my trading view is red, but it's actually the stock market closed with a very strong plus 9.21% in July. So that's actually bullish reversal at the 38.2. So definitely we're going to close the gap on the liquidity, and we're going back to 480. Now, when you have these 1 to 2, you have a full measure of the range. And to be conservative, we have 264 points. That's right, 264 points from the COVID low to this high. So you take that and you project, don't predict, project from where the price is telling you that it's reversing, meaning that it's not continuing the lower path. So 264 to the upside, that gives you at least, I will say 266, 264 to 66 points to the upside, and you get, ready? You get 648 points as a target to the upside. Now, this is not something that has to happen in just a straight line. This is not a rocket. This is just basically the pattern target based on what we have so far in the monthly chart for the SPY. Now, 648, that's prosperity. That means that there are jobs created, companies, American companies that, by the way, American tech controls the world, even in China. Then you understand that that capital is producing. Now, there's a lot of people saying, well, these companies cannot keep growing. Well, companies can become more efficient. Small, medium businesses in the US, in Central America, in Europe, in the United Kingdom, in Canada, they can become more efficient, use more technology, and improve their bottom line, which is higher profit margins with less work, right? So that's happened. That is happening. And there's a transformation of different markets that, believe it or not, it's on its way. So please believe, based on the data, don't trust these guys at CNBC. Don't listen to Jim Cramer. Hey, take a look at the MSA, what I have to do, what I have to offer to you, and how we are positioning. This is just the basic map that we have so far. Can it move lower? If it happens, we already know we're heading to the 61.8%. That will set us at 317 points for the SPY. But so far, based on the evidence, 1, 2, 3, we have a technical bottom based on Fibonacci. So guys, let's be better. Let's believe in the American dream. Cut the noise and focus on the evidence that you have so far and make this August the best August of your life. Thank you so much for watching, okay? Go ahead. You see that like button? Smash it. Like the button. And at the same time, you have that bell. Ring the bell. Click on that bell so you can get my next video probably tomorrow morning. And you can get to know more I do, the projections I have. And remember, always remember this, okay? I always say this when all my closing videos. At the end of the day, never forget, someone always knows. Ciao.